Most business owners aren't broke because they don't work hard. It's because they're making 5 major money mistakes that are quietly draining their businesses. And today I'm going to help you fix them. I'm Tremaine, and I help business owners master their finances so they can keep more of their money, grow their wealth, and run a profitable business without constantly stressing over cash flow. If that sounds like something you need, hit the subscribe button and turn those notifications on. This is an important video. A study by the SBA found that 82% of small businesses fail because of poor cash flow management. I don't want that to be you. In this video, I'll break down not just what mistakes are made, but how you can fix them starting today. Mistake number 1, not paying yourself first. A lot of business owners think I'll pay myself once the business makes more money. But if you don't pay yourself, your business is really just an expensive hobby. Why is this a problem? You need personal financial stability to make smart business decisions. If you don't set up a consistent salary or owner's draw, you'll end up taking random withdrawals from your business, which messes up cash flow. Here's what you can do right now. Open a separate bank account for personal income from the business. Decide on a percentage, even if it's just 10% of revenue that you can pay yourself consistently. Set up an automatic transfer from your business account to your personal account every 2 weeks. This will help you mimic what it's like to get a paycheck. Pro tip, if your business is unpredictable, start small and adjust as your revenue grows. Mistake number 2, mixing personal and business finances. If you're still swiping your personal debit card for business expenses or using your business account to buy groceries, stop. Now, why is this a problem? It's a tax nightmare. You'll miss deductions and could possibly trigger IRS red flags. You have cash flow confusion. You don't even really know what's actually profit. And then you don't have business credit. Banks and lenders can't take you seriously. Here's how you can clean it up immediately. 1, open up at least 3 business accounts. Operating for business and income, tax account for setting aside money for taxes, and then a profit account. So that way you can start to see the growth in your business. 2, dedicate a business credit card. Even if you're sole proprietor, using a business credit card helps you track expenses. Number 3, use accounting and bookkeeping software. If you've been mixing your finances, download your last 3 months of transactions, separate the personal from the business, and clean up your books today. Mistake number 3, pricing too low. Now, why is this a problem? If your prices are too low, you're working twice as hard for half the money. And trust me, that is an easy way to burn out. Low prices means low profit. And if your margins are too thin, your business will struggle. Cheap pricing also often attracts cheap clients who don't really value what you do. You can't scale if your prices are too low because you aren't able to hire quality help. So here's how to price for profit. First, calculate your costs. Take your time, materials, overhead, and taxes all into consideration. Second, you can use value-based pricing. So instead of charging per hour based on the transformation you're going to provide. Number 3, test and increase. If you are booked out, raise your prices by 10 to 20% and see how your audience responds. Now here's a pro tip. If no one is questioning your prices, you are probably charging too little. Mistake number 4, ignoring taxes until the last minute. Now, why is this a problem? One of the biggest reasons small businesses fail is they don't prepare for taxes, and that impacts our cash flow. The IRS does not care if you forgot. Those penalties and that interest is coming. And if you don't plan ahead, oftentimes you can owe a huge lump sum at tax time. You can avoid tax stress with these simple actions. Pay estimated quarterly taxes. The IRS expects business owners to pay every 3 months. You can hire a tax professional or use software to help you project your tax liability. You can use tax deductions strategically. Home office, internet, software, travel, and keep a detailed record of all of your spending. Here's a pro tip. If you haven't saved for taxes, you can start today by transferring 15 to 30% of your revenue into an account saving for taxes. The last mistake is not building business credit. So if you're still using your personal credit cards for business expenses, you're missing out on one of the biggest financial advantages available to entrepreneurs. Now, why is this a problem? because business loans and funding require business credit. Now, in the beginning, of course, you might need to leverage your personal credit to support it, but we don't want this to be the process all along. So here's how you can fix this. You can register your business legally, of course. That could be corporation, limited liability company. Get an EIN number. This is free from the IRS. Open your business bank account and get a business credit card. And then another thing you can do is apply for a DUNS number that can help you establish business credit history. Once you have business credit, you can secure some business loans instead of draining your personal finances. So here's a quick recap of what we talked about. 5 mistakes that business owners are making. 1, not paying yourself first. 2, mixing business and personal finances. 3, pricing too low. 4, ignoring taxes. 5, not building business credit. If you're making any of these mistakes, I show you how to fix them inside of my free virtual training, Master Your Money. You can click the link in the description and grab your spot now. Let me know, which of these mistakes have you made? Drop a comment below and I will respond. Make sure that you are subscribed and I'll see you in the next video.